Good morning everyone. Hello and welcome to the weekly commodity audiocast. I am Kainat Chenwala from Kotak Securities Commodities Research Desk, and like in every episode, today we will be navigating through the ever-changing landscape of commodity markets, examining the events that influence market sentiments and uncovering the latest trend in this dynamic world of commodities. So let's get started. So this week, last week we saw that markets swung between gains and losses as some Fed officials reiterated the higher for longer mantra, while softer economic data from the US backed the case for Fed to start easing monetary policy this year. Dollar fluctuated between 104.8 and 105.7 in line with mixed signals in the US economy and largely hawkish comments from Fed officials who echoed the sentiment to keep rates high to cool inflation towards the central bank's 2% target. US initial jobless claims increased by 22,000 in the week ended 4th May to 2,31,000, highest level since August, providing more evidence of a cooling labor market. Also, continuing claims, a proxy for the number of people receiving unemployment benefits, rose by the most in a month to 1.79 million in the week ended April 27th. In response to the weak labor market report, expectations of a rate cut in September gained traction, driving gains across global equities. Further, evidence of a cooling labor market led the S&P 500 and Nasdaq to their third straight week of gains, with the Dow Jones posting 2.16% gain for the week, marking its best week of 2024. However, an increase in short-term inflation expectations alongside signs of a US economic slowdown limited the upside potential in risky assets. Moving on to the commodity space, COMEX Gold prices jumped to 3-week high of $2,385.3 per ounce and closed the week with nearly 3% gains, as strengthening bets that the Fed will be able to start cutting interest rates this year weighed on US dollar and benchmark treasury yields. Silver surged around 7% to $29 per ounce thanks to gains in both gold and industrial metals. Talking about gold, on the daily chart, MCX Gold June futures rallied strongly after breaking out of the consolidation that has been forming since April 23rd. Since March 2024, price has been trading above the super trend 7-3 indicator, indicating that the bullish short-term trend remains intact. This week, the price might continue its upward trajectory, but resistance might be found at 73,300 and the next resistance would be at 73,960. Talking about crude prices, WTI crude approached $80 per barrel owing to lingering geopolitical tensions in the Middle East, as Israel said that it would continue its fight against Hamas in the Gaza Strip even without US assistance. Also, drop in US crude oil inventories and hike in Saudi official selling price to Asia for a third consecutive month in June was supportive. However, US gasoline and diesel demand are at the weakest seasonal level since 2020 at the onset of the summer driving season in the US. This held prices from gaining sharply. Meanwhile, increase in Chinese imports kept a lid on downside and led to a marginal weekly gain of 0.3%. Talking about the metals counter, LME base metals mostly traded higher last week, buoyed by reduced down payments and removal of property purchasing curbs in big Chinese cities, while aluminium was the only exception, which slipped more than 1% owing to record inflows at the LME warehouses. As per Securities Daily reports, citing data from the China Index Academy, about 60 cities in China have cancelled the lower limits for mortgage rates on purchases of first home since 2023, and the pace of the changes has picked up since April. Copper managed to close the week above $10,000 per ton, but the gains were limited to just 1%, as China's unwrought copper imports in April fell 7.6% to 438,000 tons in April, as a surge in global prices discouraged buying. On the daily chart, MCX Copper May futures continues opened gap up and rallied sharply on Friday, registering 2-year high of 878.75, indicating bullish bias. Price is trading above 20 SMA and super trend 7.3, confirming bullish short-term trend. So copper, we expect it to keep moving higher till 886 if the closest support level of 850 is not breached on a closing basis. So now overall next week This week, the markets, will continue to remain wary as rising risk of stagflation amid indications of a slowing U.S. economy and persistent price pressures complicate the Fed's interest rate decision. The data that was released on Friday, prelim consumer sentiment, it unexpectedly plummeted to a 6-month low of 67.4 as investors grew increasingly worried about the US economy amidst sticky inflation and prospect of higher interest rates for longer. Meanwhile, 1-year and 5-year inflation expectations surged to 3.5% and 3.1% respectively, both highest since November. Now, this emphasizes the significance of the forthcoming US inflation data and speeches by Fed officials this week as traders seek clues about the timing of potential policy easing. It's expected that the CPI may marginally decrease to 3.4% in April from 3.5% in March, so, however, remaining notably higher than the Fed's preferred range. Moreover, traders will closely scrutinize key economic indicators from China to gain insights into April's economic activity, especially after the release of positive trade figures last week. For oil market participants, a release of monthly reports from OPEC and International Energy Agency might heighten their anxiety, especially after the EIA, Energy Information Administration, revised down their oil demand estimates for 2024. So overall, the tone for this week might continue to remain a little cautious as the Fed rate cut path still remains unclear, and markets are now looking forward to more speeches and the most important US CPI data for clues on the Fed's rate cut trajectory. So on that note, I would like to conclude this edition of Commodity Audiocast, and I hope that we have been able to offer you valuable insights. Thank you so much for tuning in today, and we eagerly anticipate your presence with us again next week. Until then, happy trading. Thank you.